company in focus this morning is Elecon Engineering. The numbers have been good and the stock has been running up on the back of their Q4 results. We're speaking to the management this morning, but just before we get to that conversation, a quick recap of why the enthusiasm. Revenues were up 33% in Q4 year on year at 564 crores. EBITDA up 46%. So quite a jump there. Margins have increased 213 bips and net profit up 52%. The material handling equipment MHE segment seems to have contributed to that revenue jump. Kamlesh Shah, Group CFO, Elecon Group, is with us on the show today. Kamlesh, very good morning to you. Great to speak with you. Can you explain what has changed or what has turned around in the MHE segment that revenue is up about 93%?
Both in India as well as the overseas level, has contributed as well. And though there are challenges in the overseas market due to the disruption in the on account of geopolitical situation, still we are doing well, and we are quite confident about our overseas business. In India, particularly if you say material handling division, they are now getting a traction, considering the improvement and demand coming up across the sector, but more particularly for cement, steel, power, and fertilizer industries, where we are getting a good traction, and we see that this four sector will become a growth driver for MHE division of the company. And so far as gear is concerned, gear I think we are quite focused and we are going on the right track, and that definitely will give a good boost to us.
Yeah. Having said that, your full year revenue, of course, has grown 33% this quarter, but your guidance of 2,000 crores was not quite hit in this last quarter, even though Q4 was good. Are you maintaining the same targets now, Mr. Shah, or are those being revised?
So if I give about the guidance, we miss what you would like to say about 2,000 crore vis-a-vis actual what we have give 1,937 crore. Yeah, on that thing, there was a one incident related to the deferment of the supply. That is one thing is there. However, when we prepared our 2,000 crore guidance, generally we prepare in the Q3 of the year for the coming year. During that time, the steel price was at one particular level. And if you compare the steel price from December 31st, when we prepared our guidance, vis-a-vis when it was there by December 2023, the steel price has came down by 5%. So if I make a reverse calculation, I believe that we have achieved the target what we have given of 2,000 crore.
Kamlesh, taking a cue from that, this is Samina as well joining in. As we step into a new financial year, what are you guiding for? What sort of growth can we expect in terms of top line and bottom line for FY25?
This time, for console level, we are targeting the revenue of 2,225 crore, which you can say a 15% growth. And our EBITDA margin, we are expected to sustain at the level what we have already achieved this year. There is a scope of improvement is there. However, we are given the guidance, which is quite conservative this year. This is due to the election situation both in India in the first Q1 itself, as well as the election in the US. And further, considering the escalation in the geopolitical situation now, which is going to impact or which will have the material impact on the supply chain issue.
Right. So there is that 15% growth on top line that you're expecting, and there could be some upside risk. Is that a fair assumption, Mr. Shah?
Yeah.
So 15% is conservative. Also, talk to me about margins. You've managed to do a pretty big improvement on your margin front, close to what, 24% now. Is that sustainable, and is there any sort of risk to that number in the next couple of quarters, or FY25 you will maintain margins at 23-24%?
On an annual basis, we shall maintain the margin of 24% on the console level of our EBITDA margin. And we don't find any challenge to achieve that. Even with this conservative growth of 15%.
Kamlesh, any upside risk if we manage to get that 15% on your top line and your export market recovers and the MHE segment does the bigger contribution in terms of growth for next year, do you think margins could go upward north of 24%?
There is a scope, some little improvement we can expect. However, we, considering the what we had given the guidance earlier also, we are still, going on the same track. We have certain things on the OpEx side, which we have to do, particularly on the brand building and the business development team, which we have to strengthen further, considering the OEM markets as well as the replacement market. So we would like to, it is now make a segregation of the two teams within the business development team. So that is also our quite focus areas.
What is
Mr. Shah, can we get a sense of your order book positioning? Which segment are you focusing on going forward for the next financial year and the next few quarters, and also your geographical mix?
In terms of the product mix, we are getting the traction from steel, cement, power, material handling, and fertilizer. These are the 5 growth driver will be there. And if the monsoon is good, we will also get a good traction from sugar sector also. And if you see about the geography wise, we are going to get a good traction from the Europe itself. And we are quite confident and we are very hopeful and optimistic for the European continent to, give a good boost for our revenue coming year.
Okay. Just give us a sense of your CapEx plans as well. Since, we're speaking at the end of this financial year and setting up for the next one, are you continuing with your 300 crores sort of outlook for the next 3 years, or are you upping this?
Yeah, we are just going to close our 300 crore capex this year, which we have started 2 years back. So this is the third year, and all the machines what we are expected that will come, and that will also give a good boost for improving our efficiency. So now we are just going to get the where presently we are having the gear, the daily manufacturing to what we are going to go next. With the target what we have set for us, my gearbox will be out within 10 days to 7 days also. So that is where we are planning, and we are very clear and optimistic about to roll out this. And by the setting up this 300 crore of our capex target, that will be achievable by FY 2026.
right? So Shah, up to your order book, I know looks fairly healthy, but there are lots of moving parts. There's the concerns on the geopolitical front. There are elections back home. How does that impact your orders getting converted into revenue? I really want to understand if you're anticipating any breaks, pauses, or delays in cash flows. Because I know your debt portfolio looks extremely healthy. You've been very conservative all along. But I just want to get a sense of working capital and where things stand, and if there could be any delays in terms of payments.
So all front we are, I think, working. That is how we are, based because though we are supposed to give our guidance in the last Q3, but we are defer that to give in Q4. That itself shows how we are matured about our, when we are giving the figures to the, investors community, to the other financial institutions, we are quite conservative, and we don't foresee that will have any such kind of challenge. Even this geopolitical, we already discounted all these factors. What presently we are facing, that same election in India in Q1, in the last quarter, what we are expecting, the election in the US as well, the current geopolitical situation which got escalated further. So with all these things, we say yes, we would grow by 15%. But if this if this situation is getting settled down, particularly geopolitical situation which presently got escalated, if it for any reason if it is able to get it tamed down, then I will have the further scope of improvement available.
Right. So it looks like better margins, better order book growth of 15% for FY25, little or no debt. Anything that's keeping you awake, Mr. Shah? Any sort of concerns that as an investor one should be mindful of? I know you're benefiting from the tailwinds of sector growth, but I know you're pushing growth for some of your subsidiaries has been a challenge recently. Anything that we should keep in mind as we look at these numbers and look forward?
We are getting in fact, we don't foresee that any a bad thing is going to have, at least which will have the material impact to us. What we are looking for, there will always be a new geography which is helping us to grow. And that is what we put on our risk side. So we are very clear and, in terms of how we should focus, particularly on the cash flow, particularly on the risk of the business and other factors which are going to have the impact. So the team is, quite, what we call it our steering team, which is quite, robust enough by getting this kind of inputs. And now we can afford to get such kind of inputs which help us to make our figure work quite accurate about. I cannot say that I will be 100% sure, but we will always be near to our accuracy level.
Okay, and in terms of new geographies, you spoke about Europe. What are the other sort of details that you can give us, Mr. Shah, or is the focus going to be most of your revenues coming from India? Is that where the focus is going to be?
No, revenue from India is already there. We are quite, if you say we are in a leadership position for both material handling as well as for the gear also. Material handling, yes, as per our business strategy, we are not going for the turnkey projects. Though the customer are insisting us to, move forward for the EPC, they are looking for us, why you do not participate in everything. But we have put our stand very clear. No, we are ready to support you if the order is for the supply of equipment only. And that is what we are getting, that the stream of order in that process. In the recent quarter only, we got a big order from the steel sector as well as from the cement sector also. The same is there for the power sector, which we are sure after the election is over. Once the election protocol is over, we will definitely get that traction also.
Okay. All right. Thank you so much for speaking with us. Kamlesh Shah, the CFO of Elecon Group, talking about the numbers for FY24 and the outlook as well.